All right. What is up, everyone? Super excited for today's video. We're going to talk about the SPY. We're going to talk about QQQ. We'll break down IWM here as well. And then we need to go over TLT. Okay. I know everybody wants to talk about TLT. So we'll break that down. I've got two TLT charts to show you guys a little bit of shorter term and longer term, perspective. And then if you're going to be trading bonds, all right, and trying to, make money on TLT or different things like that, you really need to pay attention to treasury yields themselves. So we've got everyone's favorite here, the TNX, the 10-year treasury yield. All right. And there's some other things as well that you guys can pay attention to get context and clues perhaps into, bonds, sentiment in bonds, and interest rate environments. We'll take a look at the BWX, and then we'll take a look at the EQRR. Okay. Now the BWX is Bloomberg's International Treasury Bond ETF, and then the EQRR is a really amazing ETF that not enough people know about. So I want to bring exposure to it. This is an equities for rising rates ETF. So basically, this ETF is constructed to, quote unquote, go up or outperform or, perform well in a rising rate environment. All right. And it's something that I used to, short TLT in the past. We'll go over what that signal was, and we'll go over, what it's showing me right now and what it could potentially mean in the future. It's going to be a really good video. Be sure to smash that like button, subscribe to the channel. But as always, the content provided on this channel is for informational and educational purposes only. It's not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. And if you're new to the channel, I got a completely free newsletter for you guys called Investment Intelligence, giving out free, valuable finance and trading content. And I try to sprinkle in some free trade ideas in there as well. I'm sending one out, tonight or either tomorrow morning with some really good charts that I'm paying attention to. And I think you guys are going to want to pay attention to as well. So use the link in the description. Check out the website, okay, because there's a website with it. And you can go back and read some of the previous articles. It's kind of like a blog almost, where you can sign up and get it sent directly to your email inbox. You can also join the Investment Intelligence Trading Group, all right? The Discord. There's a link in the description as well for that. In there, you'll get 20 plus swing trade ideas weekly, meaning I'm basically posting 20 chart setups that I'm watching, throughout the week, from over the weekend, and then throughout the week, updating you guys on what it is that I'm paying attention to on the different opportunities, right? Because there's lots of opportunities and lots of rotations that happen, and you got to be able to catch those, right? So I like to pay attention to what I'm paying attention to and share that with the Discord members. There's custom scripts and indicators. All right, we've got exclusive chart layouts. I've got several different chart layouts. Really, really great stuff to help give you an edge and really take you to that next level, right? Let's say you feel comfortable with your technical analysis skills, but you're really trying to gain an edge, right? And really learn some more. Those chart layouts are amazing. They all have great videos explaining them. And then there's exclusive intel with unusual options activity, dark pool data, gamma levels, and more. There's a stock bot in there that can get you access to so much information, really cool graphs and charts. It even does charting for you. Let's say you want to pull up a stock real quick and see the Fibonacci levels. You can just use the stock bot for that, and it does it for you, charts it up, and gives you the levels. Really great stuff. Link is in the description. Now, let's start off here with the SPY daily chart. Everyone was panicking about this outside candle here. Now, me too. Now, when I say panicking, people are just thinking that the market is going to fall. And what's an outside candle, you may say, right? Let's say you're not too familiar with that term. It's something very important you want to pay attention to. This right here was the previous outside candle. And notice how this candlestick opened and closed outside of the previous day's candlestick right here. Okay, that's what an outside candle is. And we just had our most recent one over here. And it usually is it's not a very bearish thing, but it is a bearish chart pattern, candlestick pattern specifically. And many times it has led to a sell-off. And in the Discord, we were paying attention to the 525 level. Below 525, we were targeting down here around 518. Take a look at how well that played out. We actually came here, and I was very surprised to see this reaction from the bulls, guys. We went from 518 to back above 530 here, coming back to 530 in just 2 trading days, right? And really 1.5 if you think about it, because we had came down here early in the morning on Friday, and here we are closing on Monday just below 530. So a really strong and amazing move. We had a bullish hammer candlestick right here today. We're going to see if the bulls can have follow through, but above 525, guys, we're bullish. All-time highs are not far away at 533. and above 533, we're going to be targeting 543. Now, to me, the main thing you really want to watch, all right, is going to be up here on your RSI, right? We have a trend line here, and if this thing has a strong breakout, I do think that the SPY is going to either, retest all-time highs or potentially break out to new all-time highs. And that's the main thing I'm looking for on SPY, especially on the daily time frame. I want to see, can this daily RSI break out of its recent downtrend? That could be a signal for what could happen here. Now, if you look at the Qs, right, in tech, QQQ, we've got right here a classic plumber's pivot. Right now, what that is this is a chart pattern that you'll see in a bullish, in a bull market. It's a bull market chart pattern. And what it is it's a failed top essentially, or a liquidity grab, right? Whatever you want to call it. You see a nice rounded top here, okay? And everybody thinks that that's going to move, cause a move lower down. And we end up breaking through support, right? We have previous all-time highs. We come back down and we flush right through that zone. Or rather, the bears are looking for the flush and they never get it, okay? So then they have to make that call, right? They have to call the plumber, aka their broker, because now they're getting margin called. What happens is the bears take a position, a short position below here, and they expect price to continue heading lower or to retest this zone, reject, and head lower, and they get squeezed out of their position. So now they have to buy to close, and then you have bulls buying to open, and essentially it causes a short-term short squeeze, and you see a strong push to the upside. There's a very good saying that I want you all to learn and get familiar with. False moves lead to very fast moves, right? And, that's exactly what we're seeing, and that's what the plumber's pivot is all about, right? We saw the failed attempt, the oops here, and bears really expected things to continue heading lower, stay below the previous all-time highs, and they got squeezed out here within the past 2 trading days. This was the last plumber's pivot, guy. We had support. We came down here. We had an oops, right? We had a rounded top pattern, and look at how fast that move was to the upside. Went from below 416, below 415, all the way up to the 460s on QQQ in about a month, right? Roughly a month. This is a smaller chart pattern here, so we wouldn't expect the move to be as large as this one, but it definitely is a pattern that could potentially lead to new all-time highs in the QQQ. Now, if you're someone who's a perma bear, right, I think small caps are the ones that you really want to be paying attention to, right? We're seeing a little bit of a false move here, right? We had this RSI trend line. We were looking for a breakout, retest, push higher. We had a false breakout, guys. We had a false breakout here, and we know that those false moves oftentimes can lead to fast moves. And we also have a rising wedge here. And if this rising wedge is going to play out, this could potentially take the IWM back down to 180, potentially back down here to 170 to fill this gap to the downside. That's your bearish scenario. Now, remember, small caps, most of these companies are unprofitable. The Russell 2000, the IWM, is not generally known for having the best stocks inside of it, okay? Now, there's plenty of good individual names in there, all right? And I'm sure you guys are going to tell me all about them in the comment section. But what I mean by that is these are not the stocks with the strongest balance sheets and, the greatest earnings growth and et cetera, right? So that's why this has really been stuck below all-time highs, and we're seeing things like the SPY and the QQQ, which are heavily weighted by the biggest top tech stocks, who are all increasing their earnings and reporting good earnings because they're all spending massive amounts of money with each other, right? They're all just giving each other's money and profits to each other and making each other's earnings better, right? Meta spending tons of money with NVIDIA, right? You've got NVIDIA partnering with Amazon. You've got Apple and all of these different companies just spending massive amounts of money with each other, increasing their earnings revenue. And you don't really have that in the IWM, okay? So that's why this has really underperformed. And if you want to short something in a bull market, you want to be shorting weakness, right? You want to short the things that are, weaker, right? You're not looking to short something that's making new all-time highs and showing lots of strength and showing lots of relative strength as well, right? But that doesn't mean it's completely out, all right? I'm not too interested in shorting things in this bull market. So I'm more interested in just having a little bit of patience and buying stocks with strength. And, I think a sign of strength that we want to look for is on a larger scale, on a larger time frame. When you zoom out to the weekly chart for IWM, above 213, right? Above this Fibonacci, the 61.8% Fibonacci from the all-time high, I think you want to be long, and I think you want to take a swing trade, and you can come up here and target this zone up here in the 230s, or you can target new or previous all-time highs, right? And you can set up a good risk to reward ratio, you know, based on your own risk management levels on that type of trade opportunity. I really liked how we bounced off of the Fibonacci level here, the 382% Fibonacci retracement, which also lined up with the anchored VWAP anchored to the bear market lows. Okay. That was great. I love it when these anchored VWAPs line up perfectly with a Fibonacci and you see a strong bounce or strong rejection based off of those combinations. That's a really great sign for me. So it looks like bulls are trying to defend this, right? Especially when you zoom out. We are building a large base. They just haven't gotten whatever catalyst they need to really get a strong breakout to the upside. You know, we did have SMCI, super microcomputer or whatever. This was driving a lot of the gains in the IWM when it was still a small cap stock and in the Russell 2000. But now it's been included or rather excluded out of the IWM and it's leveled up, right? It's out of the IWM now. So, you know, you have to remember that one of the stocks that, you know, really carried a lot of the gains for the IWM is no longer in that ETF. And that could potentially, you know, hold it back a little bit in the future. It's not something that necessarily will or has to hold it back, but it is something that, you know, I think you guys should be aware of and consider. Now let's get into the juice of the video and talk about bonds here. I know a lot of you guys are here for TLT. Cup and handle on the daily time frame, okay? Looking good, looking really good right now. You know, we come on over here to the Discord and you guys can see TLT is looking pretty, guys. You know, up 200% on the call options on TLT. You know, and these are just some of the profit screenshots from the Discord. You can see I was in it last week. All right, we're still in it now. Went from 88% to now over 200% gains with the massive move that we saw in TLT here recently. And there's lots of potential, guys, here. There's still potentially more juice. Now, we've seen a massive move in just a matter of 3-4 trading days, okay? These massive moves, they often don't last very long in the same direction forever in the bond market, okay? The bond market is very technical and can be corrective, you know, so you do want to watch out here. Maybe now is not the perfect entry for a short-term trade, okay? But I think if you zoom out a little bit, right, like we are in the daily time frame, what do we see here? Okay, we see a lot of things, guys. At least I see. I don't know if you see it. So old support, new resistance, new resistance. Now we're going to come up here and potentially test this zone again. If we break out, this is our baseline. This is our base of our cup and handle or neckline of our cup and handle, whatever you want to call it. This thing breaks out, we're going to have a very strong move to the upside. And I think that TLT can head back towards the 100s. You know, if this cup and handle plays out perfectly, like in a perfect world scenario, we are going to come up here and get the gap fill up at $97. Gaps are important because 90% of the time these gaps do fill. The big question is, when do they fill? And I pointed out the gap here down to 89, you know, mentioning to a lot of people, hey, you know, if we lose this level here, 90.46, basically 90.50, I kept telling people, especially on YouTube, hey, this is the big level. If we lose that, we're going to be coming down towards 89.27 and potentially get this gap fill here at 89. You can see we got that gap fill. And as soon as we got that gap fill, we dipped down below and reversed. What does that sound like, guys? What does that sound like that I keep mentioning to you guys? That sounds exactly like the plumber's pivot, right? You see the false top here, you see an oops, right? And then you see a very strong and fast move to the upside. Guys, false moves lead to fast moves. If you can learn this, recognize this, you can make, you know, there's plenty of opportunities to profit and capitalize off of this as well. So that's why I'm saying a lot of these things. Now, 92.39, okay? 92.39 is essentially that key level. Above there, we're targeting the gap fill at 94 and then the gap fill there at 97. Those are just some basic levels right there to pay attention to and be conscious of, right? Now, here's another drawing. We zoom out a little bit more and we talk about the daily time frame. Let's go back to these anchored VWAPs. We've got an anchored VWAP here, all the way down to the lows in TLTs, to the bear market lows. All right? Here, we've got a very strong base. Remember, I told you guys, I love when these anchored VWAPs are lining up perfectly with a Fibonacci, and in this case, also a key supply-demand zone, right? Now, in this case, it's overhead supply because we are trading below it. Again, you can see the rough outline of the cup and handle here, But if we just look at it and not even draw a cup and handle, this is a base, guys. We're building a base. We're trying to put in a bottom right now on TLT. We've got lows, we've got higher lows, and we've got higher lows yet again. The big question is, are we going to be able to take out the highs above 157 and continue making higher highs, right, to keep this uptrend going? That's the big question, right? Now, if you're not too familiar with the VWAPs and the anchored VWAPs, VWAP stands for volume weighted average price. And there's an indicator where you can anchor them to a specific date and time. The reason that's so important is because if you trade above a VWAP, that lets you know that the average bull, the average buyer, is in control and should be seeing, profit relatively, right? And if you're below a VWAP, right, the average bear is in control, or the average bear, the average buyer or seller right there is in profit. Okay. And, that's what we're looking at right now, guys. I mean, it's not a coincidence that we came up here, rejected that anchored VWAP, and then head back down lower. Institutions are on record saying that they buy and sell and fill orders for clients at anchored VWAPs, right? Or at VWAPs, right? Sometimes they use a year-to-date VWAP. Sometimes they use a weekly VWAP, a month-to-date VWAP. There's more VWAPs than just the intraday VWAP that is more traditionally known. So I want you guys to get used to these. And then start recognizing whenever they're also aligning with very key and important levels, guys. This was a very good signal to potentially to go short here when we rejected the anchored VWAP and the 38.2% Fibonacci, right? But now we're coming up to retest those zone again with a bullish chart pattern known as the cup and handle. We also have our MACD curling right here. The MACD has been pretty much the easiest and, one of the more consistent, right? Not 100% win rate, but if you look at when this thing crosses below or crosses above, it's a very good signal for swing trading, right? We saw the MACD cross over to the upside here, very strong move to the upside, right? It crossed to the downside. We saw a couple days of red and we quickly reversed, and now it's curling again, trying to cross over again. Again, guys, let's look at how strong the signal is. Bearish crossover here, sell off, right? Bearish crossover here, sell off, right? Bullish crossover here, rally, right? Bearish crossover here, sell off. Here we had a bullish crossover. Again, it's not going to be 100% because there's nothing that's going to work 100% of the time. You look at this one, it crossed over on the same day where we had this top, right? And that ended up leading to a sell-off. But many, many times, guys, this indicator really, really works well and has a high win rate. When looking at the daily time frame MACD for TLT. So above 92.39, your key Fibonacci levels is going to be 95.50, and then you're targeting 150 up there, right? So, it looks good to me. It looks good for now, but there's a lot of work that needs to be done. Most notably, get above this anchored VWAP and get above 92.39. Now, when you look at treasury yields, okay, and we're going to get a little more complicated here, but I'm going to make things as simple as possible. We're looking at an Elliott wave analysis. Okay, now markets tend to move in 3-wave or 5-wave structures. Your 5-wave structures are your primary trend, and your 3-wave structures are your corrections. We had a larger cycle, wave 3 up here, topping out just a couple basis points from where we expected our wave 3 to top out at. And from wave 3, we're now looking for a corrective wave 4. Remember, we talked about the market moving in 3-wave structures that are typically your corrective waves. So in this case, you would look for a 1, 2, 3 to the downside. And those corrective forms, they're charted in an ABC format, okay? And so we got a clean wave A down. Remember, if yields are going down, this is going to be bullish for bonds, and you're going to see TLT going up. And then we got a wave B correction, right? So wave A, wave B. Okay, wave B came down to right around where we expected it. Okay, we didn't know if it was going to stay at 4.7 or if we were going to come up to around the 4.75, 4.8 area because there was a gap up there to fill. And now we're starting potentially wave C. Okay, now these aren't things that are going to work 100% of the time. These are guidelines to live in, not to live or die by, but to just follow as an outline, as a guideline for where the market could potentially go. And it's been following it extremely well. So, we expected the wave 1 down, and we talked about, how we would expect a little bit of a pullback for wave 2 up in the TNX. And TNX, you see it just came right around our wave 2 outline over here. And now we're pushing back down again. So Is this going to be an inverse cup and handle that, ultimately fires off wave three, which is going to take wave three anywhere down to about 4% on the TNX, down to about 3.25, potentially even 3.5, right? I'm not too positive where exactly this is going to land us. But the cup and handle here fired off our wave B of the ABC correction. And now this inverse cup and handle here could potentially fire off our wave three, okay, wave three of C. Okay, now ultimately wave C, we're expecting to come around, 3.3 to about 3.5. All right, that's kind of where we're looking at as a rough guideline for this whole structure right here for wave 5 of C, which is going to be C of 4. Okay, so remember, larger wave 3 expecting a wave 4. Okay, wave 4 is going to come in a corrective wave, so it should be an ABC. Okay, so wave 3 expecting ABC down to about 3.25 or 3.75 to about 3.5. And then this smaller wave C right here should come in a 1, 2, 3, 4, 5. Okay, so it appears we got the 1, 2 set up. Wave 3 is always the strongest and most profitable, wave and most impulsive out of all of them. So if you can catch a 1, 2 setup, guys, these 1, 2 setups oftentimes can bring really good profits if you are correct about the analysis. And that's what I'm watching for right now, is that if this is going to be wave 3 right here, TLT is going to have a nice run, and that also co-aligns with us breaking out of this base, and it also aligns with this cup and handle here breaking out. So, that's what I'm paying attention to right now. When it comes to, TLT, SPY, QQQ, let's look at some other things here to get some clues. Now, this is an inverse bump and run pattern, right? This is an amazing chart pattern that I really started using a lot in late 2022 and early 2023. And what it is you have a prevailing downtrend, and then you have an aggressive bump down in price. Okay, so the prevailing trend, high, lower, high. It's a downtrend, okay? And then you have, again, this aggressive bump down in price. The run of the inverse bump and run is when you break through this first trend line here, and it's usually followed by a strong move up towards the second trend line. Now, I've seen many times where it gets rejected, all right, and that does happen. But in a perfect world scenario, this is going to take you up here to where the pattern began. So that's a very strong move for the BWX. Remember, this is the Bloomberg International Treasury Bond ETF. Okay. So, this is another bullish setup here for bonds. This chart right here looks very impressive. And what are we seeing again, guys? We're seeing an anchored VWAP, this case, anchored to the bull market highs of the bond market, of the international bond market. And then we see that anchored VWAP lining up amazingly here with the 38.2% Fibonacci at 24.55. Now, we've got what appears to be a triangle pattern here, or a pennant, whatever you want to call it, with a very clean ABCDE structure here. Again, that's that 5 wave. And we're looking, what gives me the idea that this could be, the bottom here for wave E, is that on a lot of times on these breakouts, okay, for these patterns, wave E does not always have to come down and touch this trend line. And oftentimes in cases where it does break out, wave E will, put in a higher low above the trend line, right? Because that's what we're having here is lows, higher lows, and then a higher low now above that trend line. So we're establishing a new area of support and demand above our trend line here. And again, if this one breaks out, I mean, that's going to be a good look for TLT. And the chart looks very clean and very simple. All right. Now, this is EQRR. This is your equities for rising rates ETF. I kind of gave you guys a brief description. When this thing was forming a large base here and then breaking out, I spotted this when it was making that base, right? And saying, oh, no, if this thing breaks out, that's going to be bad for TLT. Okay, if we go back to TNX, we're expecting a B up, right? We're expecting an A down, a B up, right? And so we're looking at this scenario saying, hey, yields could go higher. We've got a cup and handle right here. If this thing breaks out, and we come up towards the wave B targets for A, B, C, right? For the B up here, that's going to be bad for TLT. That's going to mean TLT is going to go down, right? And we see this period here where TLT had a sharp sell-off, right? And the EQRR was one of the things that really helps me spot that and have more confidence in my play, right? So, you can look at TLT all you want, But there are other ways to find other signals. The market's always speaking to you and telling you something, but you may not be listening because you don't know what to listen for or where to listen, right? And where to, it's like a radio station, right? And there's thousands of radio stations on the stock market. And some of them, many of them are going to tell you clues and context and tell you a story. But if you're not even listening to those radio stations or those channels, you'll never hear it, right? And so that's why I'm bringing some exposure. What do I see here? Well, I see something that is respecting the technicals. I mean, beautifully. I couldn't ask for like a better setup than breaking out right above the previous highs here after forming a large multi-year base and then seeing a straight line up, okay, literally a straight line up to exactly the Fibonacci extension here, the 1618, and then getting a pullback. And so now what's the big question, Zach? Why are we looking at this chart? Well, there's two reasons, because one, this is either a big bull flag right here, okay, and this is controlled selling bull flag, and this is about to break out, and this means that something in the economy or some type of indicator, is telling the market that we could be heading into a rising rate environment, or at least an environment where rate cuts are getting pushed back and priced out of the market even further. Okay, now what else do I see? Well, this is our third time testing support. If this flushes, okay, if this flushes right here, and we see a strong move to the downside, right? That's going to be bullish for bonds. That's going to be bullish for bonds. And you could see that BWX chart and you could see that TLT chart play out some of these more bullish scenarios that we've been paying attention to. So, that's really all I'm paying attention to. I hope you guys really enjoyed the video. If you did, join the Discord, okay? There's a link in the description to get into the investment intelligence trading group. In there, posting 20 plus swing trade ideas every week. There's custom scripts and indicators. You get that exclusive intel and exclusive chart layouts. Really great, really amazing stuff inside of there. And I hope to see you guys in. You can sign up for the newsletter. That's completely free. Okay. You can get those emailed directly to your inbox, or you can just check out the website and read the articles as they are published on the website. And if you enjoy my analysis and you ever want to, do a one-on-one session, you guys feel like you want that personal touch for a coaching session, or maybe you have a lot of questions, you want to go over some of my day trading dynamics, swing trading strategies, because a lot of people don't know, but day trading is really where I do most of my work. And I just trade one thing. I just trade the SPY for the most part. And honestly, that's all you need, right? Is once you get the mastery of one stock or something like that, and you don't have to worry about scanning for this stock, and you're not familiar with how certain stocks move. There's lots of different ways to do day trading, and part of the scripts and custom indicators that you get inside of the investment intelligence Discord is the custom scripts that I made for my day trading strategy, and how I use it, why I use it. It's really good stuff. So yeah, you can click on the Ko-Fi page, click on the commissions tab. There's a link in the description to get there. Then in there you can book those coaching sessions. You guys can request a specific YouTube video on there. And you can also, they have this little buy a coffee button, basically a way to leave a tip or donation for all the free valuable content I put out, such as the videos and the newsletter. Thank you guys for watching, and I'll see you in the next one.